Hello everyone, welcome to a new video. Today I will be analyzing the company of European Wax Center, which if everything goes as planned, it should be going public this upcoming Wednesday, August 4th, 2021 in the NASDAQ under the ticker symbol EWCZ. As always, my aim with this video will be to go through the S1 filing and highlight the most relevant aspects that I found to kind of like give a summary of the company, and then as always, if you find it interesting, then you can go ahead and do your own due diligence on that, which you should always do anyways. Nevertheless, before I start with the analysis, let me quickly give you a short overview of the main topics that I will be covering in today's video. So first of all, I will start with a general introduction, and as always, we will be also looking at some general metrics, followed by analysis of the industry and also the competitors, followed as always by the financials, which is my favorite part, and after that we will also be looking at the IPO price and valuation, and finally, as always, I will be giving my personal opinion on the company and also my future plans with it. With that said though, and after I remind you that if you enjoyed the video, it would be super awesome if you could give it a like, and please also consider subscribing to the channel if you want to see more videos on upcoming IPOs. But with that said, let's go for it. European Wax Center was founded in 2004 and it is the largest franchisor operator of out-of-home waxing services, so of hair removal, in the US. As you can see in the map, they currently have 808 centers across 44 different states in the US, and out of these locations, 803 are franchise centers and 5 are corporate owned. And yes, this is correct, the company is called European Wax Center, although they have no center located in Europe, which is a bit funny. And I tried to find the explanation of maybe if there was a reasoning for this name. I didn't find anything, and the only explanation that I could come up with is that they have their suppliers of their products that they use are from Europe, so maybe that's where they took the name from, but again, I don't know about that. We will go into the specifics of the franchising model later on when we look at the income statement, but currently they have in total 260 franchisees, and out of these, 167 operate multiple centers, and this means that on average each franchisee operates 3 centers, and in fact in 2020 from the 52 new centers opened, 87% of these came from already existing franchisees, which is a very good sign that shows that the franchisees are happy and also they are making money. Going into some numbers, we have that each center is considered to reach maturity as of the 5th year of operation, and by then each center on average generates around 1 million in revenues and 0.2 million in EBITDA. And also relevant is that the initial investment that you need to put if you, for instance, wanted to open your own center is estimated to be around $356,000, and then you can have your own center and from then start operating and basically making money. And additionally, in terms of agreements, they usually have an agreement that lasts for 10 years between, of course, the franchisor, so European Wax Center, and the franchisee, and of course there are also possible extensions afterwards. Finally, on this part, within all the network of franchises that they have, they are currently employing around 7,000 employees, which means that if we divide this over the total number of franchises, we reach to an average of 8.66 employees for each center. Of course, from this we don't know if all of them are full-time or part-time, but I would assume that many of these are part-time because with less employees, I think that you can already manage a center. And then also important on this is that all of these employees that I just mentioned are not employed by European Wax Center, but they are directly employed by the franchisees that operate all of these different centers. If we look at how many employees the European Wax Center has, so basically the corporate offices, and all they need to do really is to make sure that all of this network has everything that they need, so the products, and that they do the marketing and all of these things. So they have basically, they had as of March this year, 92 full-time and 66 part-time employees. Now moving into the industry, they estimate that they are targeting an $18 billion addressable domestic market, which includes approximately 69 million US adults who are currently waxing or are interested in waxing. And the out-of-home waxing market, in which European Wax Center competes, of course, is the fastest growing hair removal alternative and grew at an estimated compound annual growth rate of 8% between 2015 and 2019 compared to 3% for the total hair removal market. Moreover, it is a fragmented market with more than 10,000 independent waxing-focused operators and more than 100,000 beauty salons. These beauty salons, they are sometimes also providing waxing services, but this is not at the core of their competences, as they are providing many other services. And now that we are mentioning the competitors, actually European Wax Center has two main direct ones that are operating also on a similar franchise model as they do. And these two are, on the one hand, Waxing the City and Lunchbox Wax. And both of these, though, are much smaller in size because Waxing the City has 123 centers and Lunchbox Wax has 52, while, as we previously mentioned, European Wax Center currently has 808 centers. And as they say in their S1 filing, they are 6 times larger in center count than its next competitor, which in this case it would be Waxing the City, and 10 times in system overall sales. However, although in their specific niche of waxing services they are the leader, when we go out of that, they are also competing against other hair removal techniques, like for instance the laser one, or all the do-it-yourself products that you can just buy in any supermarket and then you just go home and you can remove your hair with those. Now let's go into the income statement that we will use to talk a bit about its revenue model. And as you can see in the screen, the revenues are coming from 4 different streams. Firstly, and the most important one, are product sales, which include the sale of products to the franchisees like Wax or many others. And since this is a franchise, they want to have consistency across all the locations, and all the locations need to have the same products, which they are all supplied by European Wax Center, and of course they make money off that. And this represented 55.1% of the total revenues in 2020. Next, there are the royalty fees, which these are always present in any franchise model, and in this case they are 6% of the franchisee's gross sales. And in 2020, this represented 24.8% of the total revenues. Afterwards, we have the marketing fees, which are 3% of the franchisee's gross sales and are used for marketing purposes that benefit all the franchisees within the network. And this represented 13% of the total revenues. And finally, other revenues include the ones from corporate-owned centers, technology fees, and training, amongst others. And in 2020, this represented 7.1% of the total revenues. Going into the final revenues reported, we see a clear decrease of 32% due to the impacts of the pandemic last year and many centers having to remain closed. Actually, in the graph in the screen, you can see month by month how affected these were with percentage of sales compared to 2019. The months of April, May, and June were the worst, and only during the past few months the sales have been going back or slightly increasing those of 2019. Moreover, at this point, I think that it's important that we look at the system-wide sales, which includes how much were the total sales that all the centers within the network generated. Because of course, the higher the total sales, the more revenues European Wax Center will have, as they are basically making money as a percentage from the revenues that all these different centers are making. And on it, leaving aside this past year, we see growth ranging between 10 and 20% approximately, and it is important to look at this because it can help us understand and better project the growth that the company might have in the years to come. Going back to the income statement, we also have the data from the first quarter as well as estimations for the second quarter of this 2021. And in both of these, revenues are up, and actually if they maintain this trend, revenues will already be higher this year, not just than last year, but also than 2019, which is a very good sign. And then looking at the net income, In both of these quarters, they have reported profits, which is something that they had not been reporting in the past, as they had still reported losses. So it seems like we are already at the turning point of European Wax Center becoming profitable. And then in terms of balance sheet, it looks very good with a debt ratio of only 39.21%, which is very, very conservative. Now, before going into the IPO price and valuation, there are a couple of things that I would like to mention because I feel like they are relevant in order to assess the valuation and see if it's reasonable or not. And the first one of these is regarding the future plans for growth, as they are planning to 4x the current centers in the next 15 years to come and reach 3,000 centers in the US. And in line with this, they also mentioned that their growth aspiration is to be growing every year in centers between a 7 and a 10%. And the second thing is that, also related to this one, as currently 95% of the clients that they have in their centers, in their whole network, are women and only 5% are men. But as you might have noticed, there has been an increased trend of men removing the corporal hair. So they are also hoping that this percentage of only 5% men increases, and it also helps drive sales and increase them. Now, yes, let's go into the IPO price and valuation to see if we would be getting a good deal if we were to invest at the IPO price. And on that, at the moment of preparing this video, we have that its IPO price is expected to be or to range between $15 and $18 per share. And taking the middle point of this, the amount of shares outstanding after the offering, also including possible exercise of options to purchase, and the sales of this past year, 2020, we have a price to sales ratio of 10.08 times sales. However, I feel like this is not really representative, as on that we would be looking at all the data from months of the pandemic in which they had centers closed. We saw before that revenues dropped drastically. So I feel like it would be more representative to look at the forward price to sales ratio based on the revenues that they will be making, or I would expect them to make during this 2021. And for that, I essentially took the revenues that they have made already during this past 6 months and multiplied them by 2, assuming that they will at least double what they have already made. Probably it is likely that they will be making even more than that, because they have a bit of seasonality in their business, meaning that in the summer months, of course, people go to the beach and there is more demand for their services, as well as in November, December. So we could say also that during the second half of the year, usually they have higher revenues. But leaving this aside, and with what I said of multiplying the revenues already for these past 6 months by 2, we reach to a price to sales ratio, or a forward price to sales ratio that stands at 6.25 times sales. In my eyes, and with everything that we have seen, I would say that this valuation seems reasonable, especially because I would expect them to have continued growth of at least 10 to 15% every single year during the next years to come. But also, we are at the turning point at the moment of them starting to be profitable, but we still don't have enough data, or at least I would say not enough representative data of how much are the profit margins and so on to be able to calculate the PE ratio. So for this reason, personally, I won't be investing at least at this IPO price, but I will start to really consider it if it reaches around $13.5 per share, as then it would be trading at around 5 price to sales ratio, and probably at that point I would get in. I mean, the business is good. I really like franchising models in general. They have already reached profitability. And I think that the growth of 15% within the next 5 to 10 years ahead is quite conservative and realistic, because just with the new centers that they plan to add to their network of 7 to 10% in the next years to come, and then also with the growth in sales of the centers that they already have opened, I think that this is certainly achievable. And to that, we should also add that they are a company very well capitalized with a very, very nice balance sheet, and they operate in a market that I think that it will only grow, especially if this trend in general continues of considering a beautiful person or considering that it's better when somebody doesn't have hair. And I think that this especially also applies to men, and this is something that you can see in general, which is that men every time more and more are also removing the corporal hair, and if this continues, then this is a trend that should also benefit European Wax Center. Anyways, please remember that I'm no financial advisor, that everything I shared in this video are just my opinions, my thoughts, and everything that I have basically learned going through the S1 filing and doing hours of research, but you should always do your own due diligence whenever investing in this or any stock, and of course, make your own decisions. With that though, I will leave it for today. What are your thoughts on European Wax Center? Will you be investing in it? Please let me know in the comments below. If you enjoyed the video, then don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.